Hey guys, Zix here. Today we're going to talk about the fair value gap, otherwise known as the FVG, otherwise known as an imbalance between buying orders and selling orders. So what is a fair value gap? Why is it an imbalance? And what does it mean? So what is it? So when you see a big candle like this, typically obviously, there's no wicks on the inside. What ends up happening here is there's a ton of buy orders and a small amount of sell orders. So what that actually does is it leaves an imbalance in the market where you have buy orders that really shouldn't have been filled but were, and it pushed the price, right? So the idea is the market is going to come back and mitigate those orders at some point to rebalance it out. So let's see, because we actually just had this happen within the last couple days on Bitcoin, and today it's April 1st, to mark out where the imbalance actually is. So we put the marks on the wicks and we have ourselves a zone. Some people like to draw a box. I happen to really like horizontal rays, so that's what I'm going with. So technically, this is not the extent of the imbalance. The extent of the imbalance, and now that I say that, I'm going to use a box. The extent of the where is it? Is it in here? It's in here. The extent of the balance is this whole candle, right? Whoops. However, this wick here and this wick here have mitigated some of it already. So that's why we draw those wicks to go ahead and decide. Now, it's really difficult to tell looking at this candle where the imbalanced orders are. Now, there are some tools that allow you to find them very, very specifically, but this is going to vary depending on your exchange. So it's not the goal is not necessarily to catch the bottom here, because the imbalances could be here, it could be here, it could be here, or there could be multiples. And usually on these big candles, there are multiples. So what we're actually trying to do is we're trying to find 50%. We're trying to find the 50% zone. To do so, we draw this box here, and this puts an arrow right here at the 50% line. So we can do this. That is 50% of this box right here. We could go here and type, I lost it. Here it is. We'll just say 50% imbalance. That would be our level for a target. Now, this is where things get tricky. These FVG imbalances are not guaranteed to be mitigated anytime soon. Just like a CME gap, just like a naked point of control, they're not meant to be traded to unless price is already going there. Now, this one was pretty easy, right? This one was pretty obvious. And of course, as you can see, price dove straight through it. So here's another point when we're trading these. We're not necessarily looking to set orders. Now, if you had set along here, you might have been okay. But you'd have gotten a little freaked out by the time it got down here. You would have gotten a little freaked out. However, if we're up here and you see price start to come down here, this is an excellent spot to put a take profit. Maybe don't be looking to trade there, trade to there, or trade from there from the beginning. However, if you see price start to go there, these FVGs are good spots to take profit. Now, even with that said, sometimes they do line up pretty well, and you could place an order. I'm trying to look for one recently. See if there was one recently. Yeah, see, here's a good one right here. It's pretty close. So this didn't quite make it to 50%, and that's kind of what I'm talking about here. You don't know where the imbalance is. So in this spot right here, you would have been front ran. So if you were looking to trade this, you would have been front ran here. So even here, this is where it gets a little dangerous too. Price is coming back. Their fair value gap is here to here. If we're down here and you see price starting to come up, we can feel pretty confident longing. Just be ready to take profit at the beginning here. So this is where it was previously mitigated, but this is still a big spot right here. So there's definitely still more than likely an imbalance in the market here. And price almost hit that 50% line. It didn't hit that 50% line, but it almost did. In which case you would be looking to take profit. If it was me, if I was trading this specific imbalance, the second I broke this line right here, I would probably set a stop loss right above it or right below it. That way, if we take profit at 50%. Take profit at 50%, I'll set the stop loss right here. Maybe you could have made a little bit more trade there, but this is almost impossible to predict where the price is going to stop. This is clearly front ran at 50%. So it's really difficult to tell where price is going to stop there. So you would end up stopping out here, and it still would have been a good trade, right? It would have come down back to your price level, and you would have stopped out. And if we were to zoom out or zoom into the hourly, it probably would have hit it sooner than this candle. But that's besides the point. You'd have made a good solid trade there. I actually, before I did this video, I looked around. I wanted to see people's opinions of fair value gap and these imbalances and whatnot. I wanted to see what the world of crypto was saying, and I got a lot of differing ideas. Of course, I have my own opinions, but I got a lot of differing ideas. I hear some people say eventually all of that gap, all of that imbalance will be mitigated, and then I have some saying that you only trade to the 50%. You don't worry about after. You don't set any profit before that. You look for the 50%. And then I even saw some people saying that they always get mitigated. And that's when I have to take a step back and go, wait a minute. Nothing always gets mitigated, ever. Which, by the way, we have a fair value gap up here at 61. Keep an eye on that one. But then again, I've said this so many times before. Your TA is relative to the time frame. It doesn't matter what it is. It's always relative to the time frame. This is the daily chart. This is what, 4 months ago now? About 4 months ago, right? December, January, February, March, and now we're into April, a day into April. So this is 4 months old on the daily chart. How much weight are you going to put into this? Yeah, sure, price may get up there eventually, but it ain't going to be because of this imbalance. Any orders, any short or selling orders that were left imbalanced here is old. It's forgotten at this point. And I'm gonna take it a step further, and we're gonna go back in time. We're gonna take a step through the time portal here, and we're gonna go look at some old imbalances from way back when that I have marked that have not been mitigated. We've got this guy here from 24.8 to 25.750. We've got this guy here from 19,600 to 22. I actually think price is going to be in this range with it by the end of this year, but not because of these gaps. And then we got this guy here at 12,000. 12,000. I don't think that's getting mitigated anytime soon. So if someone's going to tell you that fair value gaps always get mitigated, just smack them right in the face. Just Will Smith them right in the mouth, pop them, and then move on. And then tell them to get your name out of their mouth, because that's how you Will Smith someone. Before we end the episode, I just remembered one more thing that I wanted to mention. That's pretty important when it comes to these imbalances. If you're looking to trade them on lower time frames, make sure they have confluence on higher time frames. So that was the hourly, and there was an imbalance on the hourly, and as you can see, it more or less lines up on the daily. So this is a pretty strong level here. Obviously, this guy right here, let's mark it again. Let's see what this one looked like on the hourly, just for shits and giggles. And you see this one a little bit different. On the hourly, this one's actually here and here. So it's a little bit different. But the main purpose of coming back, you're really looking to trade these on the daily or higher. Technically, you will see these on every time frame from the minute to the second. However, you're not really looking to trade imbalances on the minute chart. The price action is just too choppy. You can't really find a whole lot of confluence in other forms of TA. So my suggestion, if you're going to trade imbalances, start on the daily until you can get it figured out. Once you get it figured out on the daily, then you can start working backwards a little bit. Try some 4-hour imbalances. Try some 1-hour imbalances. I don't recommend you trying to trade on a minute chart for FVG. Not that it doesn't happen, but remember, we're looking for big price jumps, right? A price jump on a 1 minute time frame, there's not going to be much of an imbalance there, unless the candle takes up the whole stinking page. You're not going to find much of an imbalance there, and that carries through with the hourly too, right? It's got to be a pretty big candle on the hourly for it to have enough imbalances for it to be a strong level. But when you see it on daily, there's going to be enough imbalances in there for it to be considered a strong level. Now back to what I was saying. I think we're pretty much done here. I think to sum it up, this is a pretty simple concept. But I mean, if nobody explains it to you, you won't get it. I got a big old mess going on here. Let me clean up. Let me just look at this imbalance here. Yeah. So once again, a lot of buying pressure in this green one, and there wasn't any selling pressure. That's what pushes the candle so fast and so far. And whenever that happens, often you see these tiny little wicks on either side, because that's how price action works. You get small moves, followed by big moves, followed by consolidation moves, followed by big moves, followed by consolidation moves. That's just how things work. And inside of this now, we don't know where the imbalances are, so we look for that 50% line. If we see price using different methods of TA heading towards this imbalance, we can feel pretty good about taking profit at that 50%. And we could feel even better about setting our stop loss just at this line here. Even though it may get wicked before you get your profit, I am all about low risk trading. Now, if you want to take it a little bit higher and you want to try to trade to the bottom of this, by all means do it. It certainly could happen. It's happened a lot. There was a big one right here, and the whole thing got cleared. This was another big one right here. From there to there, this whole thing got cleared. Of course, this was an accumulation range, so the price is going to do this kind of thing anyway. So you could almost feel confident in that. But when you're talking about leaving accumulation and you leave this guy behind, that is where it gets a little trickier. If we take a look at I have some TA here that I haven't cleaned up. If we take a look at Ethereum, this is an example of a 50%er. We have this guy right here. We have this guy right here. Let's find the 50% line. And, oh my goodness, it is right at it. So, whoa, it went away. Well, you saw it, right? It went away. This wicked right to the 50% line. So that's kind of what we're talking about here. That's what we're going for here. And that, my friends, is going to do it for this tutorial. Is it a tutorial or an educational video? Whatever you want to call it. Don't forget, I have a public Discord server linked in the description below. We've got signals and really smart people and other people than me giving technical analysis, and we would love it if you swung on by. Thank you so very much for watching, and as always, take it easy.